Hey folks, Anthony Owens here with McKee Financial. Thrilled to kick off this episode of McKee's Market Movers. Before we dive in, a quick disclaimer. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.
Hello, I'm Josh McGlothlin, your wealth advisor at McKee Financial. I want to welcome you back to McKee's Market Movers for our 12th and final episode of Season 1. February was a challenging month for the markets, and today we're going to go into what occurred, why it matters, and what lies ahead as we enter March. After a strong start to the year, all three major U.S. equity indices ended February in the red. The S&P 500 posted a 1.4% decline as concerns about growth, inflation, and policy uncertainty weighed on investor sentiment. One of the biggest drivers of the market weakness was a mix of reports that indicated our economy could be slowing. Retail sales and non-farm payroll data came in softer than expected, pointing to a cooling economy, while the January CPI report came in hotter, once again sparking renewed recession concerns. Adding to the cautious tone, consumer confidence saw its sharpest decline since August of 2021, signaling growing uncertainty among households. Signs of a cooling labor market also emerged in February. February initial jobless claims hit the highest level so far this year, suggesting some softening in employment conditions. Housing data also showed signs of slowing, reinforcing the concerns around economic momentum. Now, higher interest rates and affordability issues continue to be a weight on today's real estate market. The Federal Reserve remained in focus throughout February. When speaking to Congress, Fed Chair Powell reiterated there's more work to be done towards their goal of 2% inflation. The Fed is going to be closely watching economic data before making any sort of policy adjustments, and as of now, rate cuts shouldn't be expected until later on in the year. Markets also faced uncertainty around the Trump administration's policies on trade, taxes, and immigration. Trump announced new tariffs on Canada, Mexico, and China, which are set to begin in March. The administration's stance on Ukraine now remains very unclear, with any peace talks ending after a tense meeting between Trump and Zelensky. These policy developments have led to increased retail selling pressure and positioning adjustments, further weighing on markets. So by now you might be asking, where is some good news? Well, here it is. Historically, the seasonal setup improves as we enter March. Since 1950, the S&P 500 averages just over a 1% gain for the month and ends up positive about 65% of the time. This momentum tends to carry into the month of April as well, which historically tends to be one of the stronger months for stocks. So this puts a wrap on Season 1 of McKee's Market Movers. I want to personally thank you for tuning in this past year. And as our firm is celebrating our 40th year anniversary, we're going to take a bit of a break, but we'll be back with more market insights. In addition to that, I'm very excited to bring some great content that's going to be centered around financial planning and helping you discover your true why in life. This way we can help guide you on a path that's both meaningful and will bring you a lot of joy. Until then, I'm Josh McGlothlin. We'll see you next time.
Securities offered through LPL Financial, member FINRA SIPC. Advisory services offered through Gladstone Institutional Advisory LLC, a registered investment advisor. Gladstone Institutional Advisory and McKee Financial Resources Inc. are separate entities from LPL Financial.